So how did I make $1,246 trading Apple put options? So looking at Apple at 12:54 on the 30-minute time chart. So 12:54, yeah, 12:54, which is this candle. So basically on the 13 candle, I played Apple put options as soon as it approached the 20-day moving average, waited for a rejection, and then at 13:23 I sold out the position, making a gain of $1,246 trading Apple put options. So 13:23 would be this candle right here. So once Apple made this huge move towards the downside and just got rejected by the 20-day moving average, just sold out the position, making a quick gain of $1,246. So basically what you're trying to do is you're trying to play calls or puts depending on how the moving averages look like on the chart. And so for me in this case, what made me play put options on Apple was basically the 9-day moving average had recently crossed over below the 20-day moving average, and to me that kind of meant that okay, this could be a possibility that Apple's momentum could transfer into being bearish for the day. And I didn't expect for Apple to make such a huge move for the day, but nonetheless, once I knew that okay, so if the 9-day moving average crossed below the 20-day moving average, maybe this could indicate a change in Apple's trend to being bearish for the day. And you can see this long candle of the 1330 candle just go all the way from 205 to all the way to a low of 200. So that was a pretty huge move, and I didn't really expect it to be that quick, really. So basically, let's say you bought put options, right, and you're struggling to find out like where to sell out. So here's how you could do it, right? So let's say you got in at the same time as me, 12:54, right? Basically the 13 candle. Let's say you played put options on Apple as soon as it approached the 20-day moving average, right? And now your next step is to wait for a rejection, right? You patiently wait for the rejection to occur. The rejection occurs on the 1330 candle, and basically what you could have done is where to sell out your position. You could have basically waited until it approached that 180 or 200-day moving average. That way you can know like, oh, maybe once it reaches that 180 or 200-day moving average, I'll sell out the position and I'll just secure the bag. So also another thing you could have done possibly is that let's see. So the second way you could have known when to sell out your position is by looking at this little small support, right? So there's this little small support around 203.71. Let's do it right here. Let's do it right here. 203.98. So you could have waited for the rejection of the 20-day moving average, and you could have sold out at this little small support level around 203.98 or 0.89, and you could have sold out your position and you could have secured a little small gain there, and that way you're not struggling knowing like where should I sell. That's what most traders struggle with. Like they struggle with like knowing like to where to sell out the position. Basically, if you kind of know where to set out your personal support levels, or how to use the moving averages as your entry or exit points. So basically just those two ways that I showed you, those are two ways that you could know when to, like, sell out your position. The third way you could, know when to sell out your position is by paying attention to your percentage target of your position. So if the position is up either 5 or 10% for the day, right? Sell out the position. Just secure the gain right there and move on to the next trade. It's basically all about mentalizing, like, your percentage target, and basically mentalizing the loss that you're willing to take in that trade. So for me, right, usually I try to aim for 5 or 10% gainers throughout the day. Just move on to the next trade and just repeat the process. And usually when I'm in a trade and it's not going my way and I see that the position is down 5 or 10%, I'll sell out the position once it reaches those thresholds of being down 5 or 10%, and just move on to the next trade. And what I'll do is I'll try to, instead of aiming for either a 5 or 10% gain, I'll try to aim for now a 15 or 20% gain instead. And so it's just all about, just knowing your personal risk tolerance that you're willing to take, and just knowing your overall percentage targets in your head. Just be realistic. The reason I say that is because most people expect for, they expect for a huge move for the day, and they just feel like, yeah, I'm just going to aim for a 50, 60, 70% gainer. And will that always happen most of the time? Not really. It's very unlikely that happens almost every day. And will you always be profitable every day? Nope. I mean, it's just part of the game, really. And it's just like me. I take losses. I'm not perfect. I rather show, I'd rather show the gains, how I went in and got out the position, and just, I feel like I give a little bit more insight with sharing gains over if I were to share my losses with you. So, but basically those are 3 ways that, you could manage your, when to, like, sell out your position in a way. So also the 4th way you could do is just basically, if you're feeling like there's no good opportunities in the stock market for that day, just don't trade at all. Just don't trade. Don't risk your money on the line. Rather, just stick on the line, on the sidelines. Try to observe the market. Maybe try to observe if that particular stock could be an opportunity for tomorrow or for this, for the week that you're trading, whatever, right? So that's the 4th way that you can manage your risk tolerance level. Just try to avoid trading if you're not feeling confident. So that's pretty much it. If you guys want to sign up with Webull, you can sign up with my Webull link located in the description below. That's pretty much it. This is not financial advice. As always, take care. Bye.